Asian markets opened mixed in the absence of cues from Wall Street that was shut on account of the President's Day holiday. The GIFT Nifty is indicating a flat start for the Indian market. In an attempt to stabilize the crisis-hit property market and the economy, China cut key mortgage rates for the first time since June. The 5-year loan prime rate was lowered while the 1-year tenure was kept unchanged. The Shanghai market trades lower following the decision. Crude prices edged lower. Brent trades at around $83 a barrel as commentary from the U.S. Federal Reserve suggests there may be some way to go before interest rate cuts. And a top deck rejig at Kotak Mahindra Bank. KVS Manian is named joint MD and Shanti Ekambaram deputy MD of the bank. Devang Ghiwala appointed the bank's new CFO. He takes over from Jaimin Bhatt with effect from the next fiscal. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we're looking at this morning. In terms of global cues, it's pretty muted because we did have Wall Street, which was shut on account of a public holiday. But the markets that we have in Asia are pretty mixed. There's no big move coming through. The market which is holding up in the green is the Taiwanese index. So this has the biggest rise right now. It's a 0.6% gain. Managed to close with some gains yesterday as well. So it's holding on to that. You also have Straits seeing a little bit of green, but just about managing to, trade in the green. A lot of the Asian markets in the past 10 minutes have slipped into the red. So the Hong Kong market, which is down around 0.4%. Shanghai, like I mentioned, is down as well. Not too much of a cut, but, around 0.25% gone there too. And Kospi also seeing a little bit of red as we kick things off. So that's what's happening across Asia. The GIFT Nifty will come up for you. We did have quite a good session yesterday. Today looks like the start could be maybe flat or a little bit lower, but we'll see if, how the momentum moves throughout the day as well. So that's what's really happening across Asia. Like I mentioned, US was shut on account of a public holiday on account of the birthday of George Washington. But in terms of cues to track from here on for the US markets, it will really be the January Fed minutes, which is due tomorrow on Wednesday, along with a lot of commentary from Fed officials, which is, slated through the week as well. This is what investors are really watching for, some kind of guidance on where rates could be headed when the next rate cuts are coming as well, because we did get a much hotter than expected CPI and PPI in the US. So that is important to track. But since we are talking about the global markets, let's also go through what really happened with Europe. You had all of the European markets which didn't see too much of a move, but there was a little bit of negative that we saw on the German DAX index. The CAC was absolutely flat, like you can see on your screen, and the FTSE managed to put on just around 0.2%. In fact, if you look at the Pan-European Stock 600, that was also just mildly higher, so 0.2% higher there as well. But this index has been seeing, new highs every day, so it has hit its highest level that we've seen in 2 years, led by a lot of the healthcare names. We were talking about the French CAC index that ended absolutely flat, but the main news that came out of the region was that the government has lowered its 2024 GDP growth forecast. So it's brought it down to 1%, and what was earlier expected was 1.4%. They say that they brought this down on account of the war in Ukraine and Gaza, which seems to have dimmed the outlook. Meanwhile, the German DAX index just a little bit under pressure there as well. And this is because Germany's central bank in a regular monthly report said that Germany is likely in a recession due to weak external demand, cautious consumers, as well as stalling domestic investments. The market, of course, did not like the sound of that, and it ended just a tad lower from the levels that we'd seen earlier in the day. But that's everything that we're really looking at globally. Let's talk about how all of the overnight cues really impact on our own markets and everything that you should watch from an India market standpoint. We have Mangalam, Hormaz, as well as Sudarshan joining us to take us through the trade setup this morning and everything that we should track. Guys, a very good morning to all of you. Hormaz, let me come to you first. Very limited global cues, but take us through what we should track from an India market standpoint.
Very limited global cues, as you just said, Pavitra. And the trend, though, the market in India in general, we've been doing pretty well for ourselves domestically. The trend remains positive. But what needs to be seen now is after a 5-day move, will we have enough legs to move higher from here on? And what has happened is that the Nifty, as Mangalam was highlighting yesterday as well, from Wednesday's low of 21,530, we've already moved almost 600 points in just 3 or 4 sessions. We are up for 5 straight days, but from Wednesday's low, we are up almost 600 points from those levels. And the first level that we need to track is yesterday's high, which was the new record that we made of 22,186. We cooled off a little from those levels, around 60 points from those levels. So that becomes the first barrier barrier for the day. It was a day of low volumes because the institutional participation was very low. FIIs were sellers, but DIIs were buyers, but both the figures for both were under 1,000 crore rupees, so less participation as well yesterday. But the good part about the good and the not so good bit about the Nifty Bank, though, is that 46,700 continues to remain a barrier for the index. The ICICI Bank participated yesterday. That was a good bit, but that was again offset because of the underperformance from HDFC Bank, Axis, and the other private lenders as well. But the good bit is that the highs and the low that the Nifty Bank made yesterday were both higher than what we saw on Friday. So it's a higher high and a higher low that the Nifty Bank made. So that is a positive. But there are signs of exhaustion coming in at higher levels, as we can see. Again, there are lack of global cues because the US was shut overnight. Some listings today, Vibhor Steel would be listing. The IPO had a very good subscription, and the GIFT Nifty is indicating a flat start. So maybe a day of consolidation lies ahead.
All right, let's see what plays out. Hormaz, thanks a lot for taking us through all of those cues. But we also have Sudarshan joining us now to take us through all of the stocks that we should watch in today's trading session. Sudarshan, what has made your list?
Morning, Pavitra. So like limited market cues, we have limited stocks in news as well. So first, I'll start with Whirlpool. Sources tell CNBC TV18 that Whirlpool book is launched and promoter is looking to sell up to 20% equity via block deals for $450 million. Floor price for the same is $1,230 per share, which is 7.5% discount to current market price. Kotak Mahindra Bank has redesignated KVS Manian as Joint Managing Director and Shanti Kambaram as Deputy Managing Director. Remember, last week we had reported that KVS Manian is one of the candidates being shortlisted for the post of Federal Bank MD and CEO. NBCC has got 3 work orders of rupees 369 crore. Minda Corp, Bela Agrawal has sold entire 4.5% stake and mutual funds are buyers. Torrent Power is looking to invest up to rupees 2,500 crore to develop 4 projects in Uttar Pradesh. Sula Vinayar, CNBC TV18 news break is confirmed. Vedlinvest Asia has sold its entire 8.3% stake via block deals and MS Singapore PTE is a buyer. Peshalo Digital board is meeting on February 22 to consider fundraising, and Deepak Fertilizers has signed a 15-year LNG contract with Norway-based Equinor, and agreement is to supply up to 0.65 MT over 15 years beginning 2026.
All right, so Darshan, thanks a lot for taking us through all of these stocks. We will watch for these in today's trading session. By the way, it'll also be interesting to see what really happens with the PSUs because of, the last hour activity that we saw yesterday. So maybe that entire pack will be interesting to track. But Mangalam is here to take us through all of the cues from the futures and options space. Mangalam, what are you looking at?
Well, limited or no, the market continues to make record highs when it comes to cues, right? Yesterday, yes, we did see, the markets do well. And after that, there was some sort of profit taking at the end, but nevertheless, on a closing basis, it was a record high. The only fly in the ointment was the Nifty as well as the India Wix were both moving higher. Typically, you would want in a rising market to see the Wix cool off, and that was something that caused a bit of nervousness, and that's something that played out in the last hour of trade itself. But as we move on, yesterday's up move was led largely by the DII moves because 450 crores were the purchase that we saw out there. On a gross basis, the DII volumes were lower and as were the FII volumes. But importantly, the Nifty futures and the Nifty Bank futures. The Nifty Bank underperformed yesterday. The Nifty futures added 1.3% in open interest. The Nifty Bank saw a correction of 3.9% in open interest, and that was telling you that there was some unwinding there. And that's exactly what the FIs did in index futures. They bought about 1,000 crores in Nifty futures, but they sold about 300 crores in Nifty Bank futures, and that remains one of the concerns to watch out for the market itself, the underperformance of the Nifty Bank. They're 39% long in index futures, largely because of the purchase that they made in Nifty. Important to know where the market, goes from here. 22,100 call writers are extremely active. That's telling you between yesterday's high of 186 to around 250, we will see some sort of resistance. And at the lower levels, there would be support at around that 22,000 mark itself. It is financial services expiry, and the Nifty Bank needs to cross that 50-day moving average on the way up. Just watch out for a few stocks. Biocon is back in F&O ban. Delta Corp and Balrampur, both of them did well yesterday out of F&O ban, and we did see a lot of long positions being added on Dixon.
Okay, got that. Mangalam, thanks a lot for laying out all of those cues for us. That is the trade setup as we see it this morning. We need to get into a short break now, but on the other side, like we mentioned, Kotak Mahindra Bank has announced a series of changes at its top deck. We'll bring you more on that when we come back. Welcome back. You're still tuned into Power Breakfast. Now, some important news is that Kotak Mahindra Bank has announced a slew of changes at its top management. So you have Devang Ghiwala, who has been appointed as the bank's new Chief Financial Officer. This is from the 1st of April. But there are a whole bunch of other changes as well. So Ritu is joining us with all of the details. Ritu?
Well, this is the first big management rejig that we're seeing at Kotak Mahindra Bank since Uday Kotak stepped down as the CEO and Ashok Vaswani took over. The bank has made 5 key changes in its top brass, and the key among them is redesignating KVS Manian as a joint managing director of the bank with effect from the 1st of March. Now, Manian is currently a whole-time director and leads the corporate banking business, and he was seen earlier as one of the potential successors to Uday Kotak. But this redesignation assumes even more significance amid reports that KVS Manian was potentially in the running for the Federal Bank CEO position. So will this elevation change things? We'll have to see. Remember, Deepak Gupta was the last joint MD until he retired as the interim CEO in December last year. The second key redesignation is that of Shanti Ikambaram, also currently a whole-time director and also believed to be one of the people who were in the running to succeed Uday Kotak. She has now been redesignated as a deputy managing director. This is also an interesting move because it is perhaps the first time that Kotak Bank has created this position of a DMD. In other key changes, Devang Ghiwala will take over as the president and group CFO with effect from the 1st of April when the current group CFO, Jaimin Bhatt, retires. The bank has also named Milind Nagnur, currently the Chief Technology Officer, as the Chief Operating Officer, and Paul Parambi, who's currently the Chief Risk Officer, as the Group Chief Risk Officer. So important changes all around at the senior management of the bank, and like we said, the first one under Ashok Vaswani's leadership.
All right, very important. Ritu, thanks a lot for taking us through all of those details. But staying with the banking space, HDFC Bank aims to maintain financial stability and continue its trajectory of profitable growth. That is the word coming in from the MD and CEO, Shashidhar Jagdishan, speaking to investors at a conference hosted by Goldman Sachs. He adds that the merger preponed the loan growth of the combined entity, triggering the need then to raise funds. Listen in.
Ever since we announced the merger, we realized that with the merger will come a preponement of loans on our balance sheet, which is pretty much reflected in the constitution of the share. I mean, we now have around 14 to 15% share of loans on the stock of our balance sheet as against to 10 to 11% of deposits. We realized that effectively we have preponed the loan growth, so I need to now have that period of I would say, what do you call it, transition time to warm up the engine to raise that amount of equivalent granular sustainable funding to be able to substitute some of the bond maturities so that I can have a reasonable amount of share moving up. We have been operating our loan deposit ratio in a reasonably healthy range of around 85 to 90% or 80 to 90% depending on which year it is, and it's a long-term average. Obviously, we have grown, which means that the growth rate in our deposits and loans have been rather on very similar pace of growth. Going forward, whatever we do will be very similar to what we have done in the past, which means that we'll maintain a very healthy incremental LDRs. As I said, it's a balance of how much I want to deploy and how much I want to repay, and that itself, since these are all high costs, it sort of gives you a kind of a massive fillip to your profitability.
Okay, that is the word coming in from the HDFC Bank MD and CEO. But with that, we need to get into a short break. On the other side, we're tracking all of the cues from the commodity market. Stay tuned. We'll be back in. Welcome back. You're still tuned into Power Breakfast. Let's now bring you the latest updates from the conflict in West Asia. Even as the US and allies push for a ceasefire in Gaza, Israel rejects proposals, says if hostages are not returned safely before Ramadan, they will launch an attack on Rafah. The negotiations held at Cairo remain at an impasse, and Israel and Hamas fail to find common ground. We have Raf Sanchez from NBC News with all of the latest.
The Israeli government is warning that it will push ahead with its threatened assault on the city of Rafah in southern Gaza, even during the Islamic holy month of Ramadan, if the remaining hostages held by Hamas are not released. That warning coming from Benny Gantz, a member of the Israeli war cabinet, who says that Israel will move into Rafah, where more than half the population of Gaza, some 1.4 million Palestinians, are sheltering, if the hostages are not released by March 10th, by the start of Ramadan. There is a lot of concern worldwide that while there has been global shock over the images coming out of Gaza, the scale of the civilian casualties, that the situation will get only more sensitive during the month of Ramadan. Now, there is not a lot of optimism about a deal to free the hostages and pause the fighting before them. CIA Director Bill Burns was in Cairo meeting with officials from Israel, Qatar, and Egypt. But the Israeli government pulling its negotiators back, saying that Hamas's demands at this point are delusional and there is no point continuing with these negotiations. Earlier, the Israeli military releasing video, it says shows the youngest hostage, Kafir Bibas, who is a little over 1 year old now. He was just 10 months when he was kidnapped along with his mother, father, and older brother on October 7th. This video shows the family in the southern city of Han Yunis hours after they were snatched from their homes on a kibbutz. That's according to the Israeli military. And this video causing fresh agony.
All right, that is the latest from the conflict in West Asia. We'll, of course, keep bringing you more on this through the days. But for now, let's talk about all of the cues from the commodity markets. We have Manisha joining us with an update. Manisha, good morning.
Morning, Pavitra. Thank you for that. Well, of course, the Middle East tensions is one part of it, but the other is the action coming in from China today, where they have cut the 5-year loan prime rate by 25 basis points to 3.95%. Well, the 1-year bank rate has not been changed, but China, remember, did cut the RRR by 50 basis points from 5th of Feb as well. So that really seems to be supporting the metal prices right now, which had declined anywhere between 1 to 2% overnight. But it really is about the U.S. Fed meeting minutes signaling a patience towards rate cuts is what really seems to be keeping the prices in check as well. So looking at the crude oil prices, while of course Israel raiding Gaza Strip, second hospital out of service, and Houthi fighters claiming responsibility for attack on India-bound oil tanker is something that is keeping the prices above $83 a barrel. But the markets do believe that you could be looking at a crude surplus in 2024 because the demand still doesn't seem to be picking up. When it comes to metals as a sector, we still are looking at some pressure here. Copper prices fell 1.5% overnight. Aluminum is trading at a 1-month lows right now. Silver also has come off its highs. The only thing that I see positive right now is gold prices holding around $2,020 an ounce.
All right, Manisha, thanks a lot for getting us that update from the commodities pack. But with that, let's also talk about the latest and the ongoing protests around New Delhi. We have the farmers' protest, which continues, and their march towards the national capital will also continue because they have rejected the government's proposal to procure 5 crops on a minimum support price basis for 5 years. These crops include maize, cotton, and pulses, and the farmers now plan to reach Delhi by tomorrow to be able to lay out all of their demands. Meanwhile, as protests erupt, internet services have been suspended in several districts, including Ambala, Jind, and Hisar till midnight. Okay, that is all of the visuals and the latest updates that we are getting from the farmers' protest. We do have to wind down on the show on that note, but thanks for tuning in. We have Bazaar Morning Call on the other side.